Thank you. It seems life is getting easy with all these developments in the digitalization, but maybe not in my age, because I never throw a microphone to the speakers. Even I'm joining lots of conferences. Let's try. Maybe better to not ask any question to me. Ladies and gentlemen, the efcom community, first, I'm already presented, but I want to introduce myself. My name is Betül Kurtulus. I am the Regional Director of FCI, responsible for Central Eastern Europe, Southeastern Europe, and the Middle East. Thank you for efcom, Federico, for inviting myself and FCI today. We have a great partnership with efcom. In almost all regions, we're working together for supporting the factoring operation, development of the factoring operation, education of the people. Today, I will give you some very short summary about the development of the world factoring, where we are coming from, where we are going through. But first of all, for those of you who doesn't know FCI, most of you most probably knows FCI, but for those of you who doesn't know about FCI, I want to say a few words about who we are, what we are doing for the receivable financing industry. FCI is the global association representing the open account receivable financing. Our mission is the supporting the industry. The core focus of our association is factoring, but the other types of the receivable financing products like invoice discounting, other supply chain finance solutions is also FCI focus. We are the voice of the global receivable finance. What we are doing, we facilitate and promote international factoring through the correspondent factoring platform within our members. And we actively support the growth of the industry, work jointly with the policymakers, regulators, investment bank to support the stakeholders, members, countries to build the factoring operation, to develop the factoring operation. We promote the best in the industry practices through the education. We publish, we gather, we prepare, and we publish the factoring industry statistics. Our members generating almost 85% of the world factoring volume. And FCI endorses financial stability, the prevention of financial crime, and respect for the regulatory compliance and the conduct. I will go through the industry statistic, global factoring growth. This slide shows the compound annual growth rate of world factoring volume. So you see for the last 20 years, the compound annual growth rate of factoring is 8.2%, which is very, very good increase, especially from 2017 to last year. The growth rate of the factoring industry is almost booming. So there is a very, very satisfactory increase in our industry. So in the distribution of the blue and the purple part, you see the international and the domestic business. Usually the biggest part of the business is coming from the domestic. So 80% in general in a country basis, in also company basis, usually on the average the 80% is coming domestic and 20% of turnover is coming from the international business. So without domestic business, it is very difficult, very not common to start international business. Here is the global factoring statistics and market share by region. Of course, Europe is our biggest market and the oldest and the most developed market. Almost the market share is 70% in the world factoring volume. The increase is 18% for last year. It is phenomenal. It's the increase in the most of the European markets in factoring turnover was so good for the last year. And the increase from the America region, from South and the North America, is also very satisfactory. The amounts are small, but especially from the South America, for different countries, the increase of the factoring is so satisfactory, almost 50% increase. And Africa, we have a huge investment in Africa. There is for the last 2 years, there is one regional director working with the African Exim Bank, and there is a huge development in Africa. The country is in a banking system maybe not that developed like Europe, but the increase of the potential, the increase of the knowledge, everything is very satisfactory. The last year increase is like also 30%, and this year it is 29% increase in the Africa region. Asia Pacific is also following the Europe. It is the second biggest market, and the increase in 17%. And coming to Middle East, the increase is 2.2%. So which seems it is the factoring operation is not so developed, which is the fact. It is not developed yet, but there is a huge interest for the, let's say, not only factoring. We call it supply chain finance solution, factoring, reverse factoring, invoice discounting. So in different countries of Middle East, I am witnessing not only interest, also the investment from the banks. For example, I have been a couple of times in Saudi Arabia last year and also this year. Almost all banks, they have a software, a kind of a program for the reverse factoring supply chain finance solution. Even any bank, if they don't have any solution, their intention to have one. And also for the factoring operation, the government, SAMA, they are supporting, they're investing for the digitalization on a governmental level. So there is a huge development in Saudi Arabia. It's one of the leading country in the Middle East. And also UAE, the new factoring law has been published. In Oman, I was in Oman also, because factoring is very important for the SME financing. And the Middle East region really wants to invest for the non-oil industry to support their economies, their SMEs, their employment. So there is a huge development in the Middle East market. I'm sure that I'm more optimistic than the other continents. I'm more optimistic in the Middle East for the future development of the factoring industry. Here is the distribution, as I mentioned, almost 70% of the business coming from Europe. It's the biggest market and the oldest market. And North and South America, the total turnover, 7% of the total turnover is coming from US market. The second biggest market is China, 24%. We have almost 50 members only from China. From the whole Asia, it is 24%. Africa, unfortunately, the amount of the percentage of the total turnover, 1.1%. But there is huge interest in Africa also. Huge interest, huge investment also for the Islamic factoring. And from Middle East, as I mentioned, it is even less than 1%. But it is the developments are very, very, very promising. So here is the Europe statistics. You see, it's maybe not. You already know your market. The development for the last 1 year, the increase of the factoring turnover is 20% in Germany. It's a very important market for the countries in Central Eastern Europe, South Eastern Europe, because these countries' economies are, maybe I can say, totally depending on the developed countries of the Europe, especially Germany, because all the side production is coming from the Central Eastern Europe, South Eastern Europe, developing countries. So the factoring volume in all of these countries is very important for the rest of the developing emerging countries of the Europe. So generally speaking, 80% increase is very satisfactory. It was a booming year for factoring for the last year. In general, sorry, I forgot to tell you that in general, in total, the increase is 18%. So double-digit increase, usually we don't witness. It's a very, very satisfactory increase. In France, it is 15%. United Kingdom, for the last 2 years, the increase was so high. So comparatively, it is 7%, but it's also a very big market. Italy 14%, Spain 30% increase in Spanish markets, because last year they invested a kind of a receivable recording center, which is very important for the factoring industries. All banks invested in this kind of general solutions are also on a governmental level is very supportive for the factoring industry. Here is the Asia factoring statistics. As I mentioned, China is our biggest market. It's 22% increase. In general, in Asia, the increase is 17%. Here is the Americas. Usually the increase is coming from the Middle and the South American countries like Brazil. There are very good business cases in these countries. We are following one by one the members. The increase in Brazil is 33%, Mexico, Chile. There are very good business cases from the US market. And also, this is the African statistic. As you see in South Africa, it is the biggest market, and the increase is 38%. It's a huge increase here. And also, there is some kind of business cases very newly established with the support of the African Exim Bank, with the support of Islamic Development Bank, and also EBRD. LC-linked factoring business. They're really good, very successful business cases. Our members will announce these business cases during our annual meeting, which we held end of October in Marrakesh. And also, in the middle of the Africa, the developments is not that, the countries are not that developed, but in the north of Africa, like Tunisia, Egypt. The increase is very small in Egypt, but the factoring market is very developed in this country. But in general, it is 30% almost increase. This is the penetration chart for the factoring industry, which shows the development as how much developed this business in the countries, and also how much supportive for their businesses. I like this chart because it is easy to understand the volume. When we say it is this amount, that amount, maybe it doesn't sound something to you, but comparison with the GDP is very important. So you see here in Germany, our country, it is almost 10%, which is very satisfactory. But in general, in Europe, the EUF statistic shows us the GDP penetration is 12%, which shows the importance of this product in your market. And in the world, this year, the factoring turnover reached 4%. GDP penetration, which was 3.7% last year. So the increase is also very satisfactory. So our business is really growing quite fast. And also for the rest of the countries, you see it's just very satisfactory. In Belgium, it's 22%. This is the GDP penetration. So it is a very widely using a product for all these countries. But when we look at it's also in Italy, it is 15%, Spain 19%. So when we are coming to Turkey, which is the Germany is very important market for the Turkish financial institutions. Even we have in Turkey, we have a very developed factoring market as an IT solution, as a law, but the penetration is 3%. So it is very important, this amount, the increase of the amount of the business in the European countries. So here you see the Central Eastern Europe, South Eastern Europe, and the Middle East growth rate and the net membership. If we look at the membership of this region, which is around Germany, let's say, it is almost 30% of the total FCI membership as a number. And the increase, when we look at the increase, for the last year, Central Eastern Europe, the increase of the factoring turnover is 42%. It is phenomenal. It's very good. This is the increase of the total domestic and international business. And there are some countries I will show you in the next slides. The increase is over 50%. And for the total Central Eastern Europe, it is 23% increase for the last year. Here is the CEE market performance for some of the countries and the market penetration, GDP penetration. So in the developed countries like Poland, what I mean with the developed countries is there is an e-solution, e-invoicing, e-signature, and factoring companies, all this kind of information in the market. So we can reach the GDP penetration more than 10%. But I must say, for example, the small and on the factoring perception underdeveloped countries of the region like Moldova, Azerbaijan, Ukraine. For example, in Moldova, I have been 2 times in Moldova this year. We have 4 members, even it's a very small country. So there's a huge interest, even in the small countries of this region. In Azerbaijan, it's also it's zero. The GDP penetration. The factoring is very small, but we have 2 members in Azerbaijan, and there is also a huge interest for the SME financing, even from the government side. In Ukraine, after the invasion, we are supporting as an FCI Ukrainian banks to launch the factoring operation, and they have a huge interest for the digitalization also. So there are huge interest in this, even for the small in Georgia. In Slovakia, the increase of the factoring turnover is really, really satisfactory. Here is the Central Eastern European market, as a GDP penetration, Cyprus is the biggest, but as an amount, Turkey is the biggest market. And Germany is a very important market for the Turkish factoring industry. Also the banking system, but we are talking about factoring industry today because as a trade partner, Germany is the biggest trade partner of Turkey. The whole, almost 70% of the business is open account, and with the payment term more than 60 days. So it is all factorable. So since years, the relation between the Turkish export factors and the German import factors are very, very good. So here is the 2-factor imports. Germany is our biggest import factoring company. Since years, we have very successful operation in Germany, and the second biggest market is USA, and France and Japan is following. And as I mentioned, because of the Germany and Turkey relation, it also affects the business. Of course, Germany is not receiving any business only from Turkey. It is, as I already mentioned, it's very important for the small countries of the Southeastern Europe, but Turkey is the biggest exporting country under FCI. Spain, we used to see the Asian countries in this chart since years, but Spain, because of the digital investments of the country for the last 2 years, now the second biggest country is the Spain. Taiwan, Italy, China, India is following. This is the 2-factor export factoring volume. We have 2 new products under FCI. One is reverse factoring. The other one is the Islamic international factoring. Reverse factoring, FCI reverse, is the product that FCI is providing for their members on the Edifactoring. I don't want to go into the detail about this program. The only positive side is, if you are using a reverse factoring product, onboarding of the sellers in the different countries is very difficult for the understanding of the business, technicality, KYC, this and that. So FCI is, of course, very helpful for this kind of solutions. Islamic international factoring. So Islamic finance increase is really, the increase of the Islamic financing is more than, as a percentage, conventional banking increase. And the countries who are using Islamic financing is not small. So it is the basic principles of Islamic financing. Maybe you are already aware. There is no interest in the business. And these are some figures from the Islamic financing. You see here that the Islamic finance asset growth, the expectation for the 2025 will be $5 trillion in the next 2-3 years' time. So the expectation is very huge for the increase of this business. And some figures to understand this business. For example, the countries with Islamic finance regulation is 47. So there is a world for the there's a world outside the conventional banking system. So FCI decided to invest in this product because general rules of international factoring, which FCI owns these rules, define the roles and responsibilities of the two parties: export factor, import factor, exporter, and the importer. But we are not defining anything about the financing. Financing is the main aim of this business, but we are just structuring the business. So there is no interest in our rules. So itself, general rules of international factoring is very Islamic product. So the main similarities between factoring and Islamic murabaha, maybe these wordings, the murabaha is not so familiar with you. Sales contract is approved by the factory, which is also the same for the conventional factor. Factor is sole owner of the receivables and obligation to pay on the due date. So it is very similar with the conventional way of doing factoring. So the differences, not all industries are covered by the Islamic financing, but these industries are not subject. Is it subject, but very small, like alcohol, tobacco, or supporting gambling, some kind of things, but which is very, very small in FCI. And export factor must be owner of the receivable, which is in some cases, we have a factoring operation in FCI where there is a provision of assignment, which is quite applicable in Germany also, which is not possible under Islamic factoring. So I don't want to go into the details. So it is because of the similarities, we prepared a supplemental agreement. It is approved by the FCI legal committee with the support of the Islamic Development Bank. And with the signing of the supplementary agreement, now today, any Islamic financial institution can do business with our conventional members. Last year, the first transaction has been realized with one of the Turkish Islamic members. And I must say it was so difficult to explain this product to European members because they need to also understand as an importing side because of the kind of wordings like murabaha, Sharia compliant, Islamic this and that. This is very outside of the conventional bankers' mindset, but the system is the same. Today, my life experience is I spent almost 3 years to explain this product. Is almost similar with the conventional way of doing factoring. Today, in the next 1 month, we will join our annual meeting, and our members from Europe, from Germany, from Italy, from France, they're asking me, is there any Islamic members are joining? We want to work with them because it is a very good, because it is an untouched market. They never, the open account is not in their work, but it is a need. So there is a huge increase in the turnover. You will see in FCI statistics next year. I don't want to go into differences, but generally speaking, there is a big potential in this market. Before conclusion, I want to also mention the successful organizational structure items that we search from FCI members who are successful in this factoring business and why they are successful. The first thing we found, there are 3 kinds of operation. One is separately incorporated company, which is successful in many of the countries. Division of a bank or integrated into a bank activity. The other very important point of success is human capital. it's really important to educate our people. What I mean from our people is not only our staff or our colleague. It also includes all the ecosystem, the people from the ecosystem, the government representative, regulators, legal people, to success of the operation in any kind of business, but as a business, as reverse factoring, supply chain finance, the education of the human capital is very, very important. And the last one is, as we are here in the EFCOM conference, I must say, it's very important. This is the findings of FCI. I'm not saying this because we are in EFCOM meeting, but this is the findings of the FCI from within the 400 members investigation. The investing in the right software is very, very important, because we are witnessing that some of the financial institutions are investing on the wrong software. Sometimes it is too big for them, sometimes it is too detailed for them. And you know, these kind of investments, there is no U-turn. When you start to invest in software, it is just you need to go on the same direction. So investing in the right software, right digital solution is very, very important. Not only in the company level, also country level. In a successful factoring operation, we see that governmental level digital solutions, the data processing, the providing the data is very important, because if the government, like the credit bureau or receivable recording centers, provide a good data to the financial institutions, it is in today's artificial intelligence solutions, it is very easy to build your successful credit policy. Processing invoices is easy if there's a data for this. So the processing of the invoices, debtor payments, everything, MIS reports is very, very important to choosing the right software. I think this is my, it was my last page. So thank you for listening to me. I hope it was informative for you. Now it is the second challenge. If there's any question, I need to throw this one. So it's quite stressful. Thank you so much.